Today we're actually going to talk about how interest rate actually shape property prices because I think interest rate is a very hot topic.
Provided right now the rate is falling, right?
Yeah.
So how does this really affect buyer, seller today and also the property market?
Yeah, and also in this video, right, we want to explain a bit, how we see how money move, and how does it affect property also.
Okay, so disclaimer, everything we share is based on our own research and our own opinion. If you really want to look into buying property, please do your own research. If not, you can look for us. We can happy to share with you more. So interest rate, now I think the most hot topic right now. Everyone is talking about interest rate. Interest rate is falling. Should I go into it? Should I buy now? We should see all the launches right now is doing very well already.
Correct. I think if you're following the news and all that, you know that interest rate has fallen. So there are a lot of people in the market right now thinking to enter because low interest rate means your installment, all this is also lower. Yeah, so this could be a driving factor in terms of why the market is moving so hot.
Yeah, because today if you ask me if I'm a buyer, of course I want to buy when the interest rate is low. Who want to buy when the interest rate is high? Okay, so we understand why interest rate is high. Sometimes when interest rate is high is actually to stop us from spending, is to curb the inflation.
Yeah.
Then when the interest rate is low, right, is to encourage us to spend because it's to stimulate the market, which is we're gonna touch on a bit. If you understand this thing about how money flow, right, you will actually make smarter decision in terms of buying and selling property.
Right.
Okay. So now the Fed has just cut the rate, everyone know by 25 basis point on September. They say that there will be 2 more cuts on the way. So what is this going to impact, knowing that the rate is falling? So today, just an overall cycle.
Okay, so what is the impact, right? Of course, this is a summary of the entire cycle, which we are going to go in depth. But the key thing, of course, when we want to understand all this, right, we also want to ask ourselves one question, what will happen to the property prices? Yeah, so this is one important question that I want you all to keep in mind as we watch and continue in this video.
Okay, so what happens when the interest rate is high? So usually when interest rate is high, right, I think consumer, investor will always look for safer products. Products like T-bills, bonds, or even fixed deposit, because you can see average on the rate for February 2023, right? You see the return is about 4%. Even fixed D also give you about 4%. Today you tell me 4%,
I think it's quite okay.
Quite okay. It's like it's something that is very safe because fixed D won't go wrong unless the bank go bankrupt, which I think not so easy
So when interest rate is high, right, of course people tend to go for the safer products.
Because they don't want to lose money.
Don't lose money, then it's safe then also not too bad.
Because if you want to put in some other investment, right, maybe a higher risk.
Higher risk, right.
Then I think those big players will not want to expose themselves to so much risk.
Yes.
That's why all the people will come to this sector.
Okay.
But what happens when the interest rate start to get lower? I think this is the thing that we have to shift also. We have to learn to shift our mindset. When the interest rate start to become lower, right, based on September, now it's 1.2, 1.3. You see now, T-bills also 1.4. Today you put inside here,
it's not as attractive.
Yeah, it's not attractive really. For the consumer, still okay, because for us, maybe we still don't want.
We still prefer safer
products.
Safer product.
But you tell me, if you talk about those
fund managers,
correct? They will have to shift their product because they are losing to inflation already.
Correct. They're not getting that enough returns, right? Because at the end of the day, everyone also want a decent returns.
Correct.
Yeah, especially if you're managing hundreds of millions, right?
That's why it's investment. So when this type of safe product become too low, right, they have to shift the money. Where do they shift to? Okay,
so for example, when the yield start to drop, of course, when they cut interest rate, right? So I actually came across this article, right, when they said what happened, Singapore investors should rely on low risk, like fixed deposit. They will cast their eye on alternatives. So I think the news also, the experts also know that when the yield is not so good, people will start to look for alternatives because everyone want their money to work hard for them.
Correct.
Right? And then the alternative one, it makes sense to actually explore alternative investment opportunities in a low interest rate environment. So this is actually what will happen when there's a low interest rate. People start to look at alternative.
When they look for alternative, meaning they also okay to take more risk.
Correct.
Because right now, if they continue to put the money in the safe environment, right, they're actually losing money to inflation.
Yes.
So they need to find something to increase their risk and also continue to make the money work hard for them.
Correct.
This is how money flows. So money start to flow to other investment.
Yes.
So usually, what are the investment products that usually flow, right? So the big player must start to move to equity.
So what happened, when they start to move the money, right, where would they move their money to? I would say the big players also want to move to somewhere where it's relatively safer. People might be interested in, right, is the actually Singapore equities. Because, we all know that our Singapore, right, is actually a relatively quite a safe and stable market. So why they would think of this kind of of thing is because they want to look elsewhere to earn a decent return on their spare cash or their funds. Yeah, so they might start to move into Singapore equities.
But of course, we must also learn this thing like why will interest rate drop? Like why there's high, why there's low, all these things. But you must understand when actually interest rate start to drop, right? Sometimes it's considered market not doing well.
Yeah,
Because why they cut rate is to promote spending.
correct.
Also to increase borrowing from businesses.
Yeah.
So that this will stimulate the market.
Yes.
When you understand, right? For example, today as a business, right? If you increase your borrowing but at a lower interest rate, right? Means your cost become lower.
Yeah.
Profitability go higher.
Yeah.
So in the end,
It's to spur the market.
it's to spur the market. Then
Yeah.
it's like how to say but actually the market is not doing well. But interest rate drop because they need people to spend money.
Correct.
Because if the people don't spend right, it will go into recession.
Yeah. So one thing, of course, when we say, like, example, for homeowners, right, once their mortgage actually repayments start to lesser, right, they will have actually more money to spend on, example, goods and services or whatever, or spend on other products, which will cause those other products to help the economy.
Yeah, correct. Today, when interest rate drop, the biggest benefit will be the businesses because of the lower borrowing cost. When the lower borrowing cost, right, it means more profit.
Yeah.
More profit meaning the company will do well. Even their own stocks will start to go up.
Correct.
You can see once the interest rate start to drop, right, actually the STI go up by 0.3%. So everything is correlated. Right? If you really study how the money move, right, how the interest rate drop, then people start to spend, business borrow more because of low interest rate, then revenue start to come out. Then the stock goes up.
Yeah.
People will make money in a way. You see during COVID, some of the stock actually rebounded very fast.
Yes.
Out of businesses. But what does this actually means to you as a buyer today? If you look closely today, new launch sales, the blue line, and this line is actually the STI. Actually, you can see actually it's quite correlated.
Yeah. If you look at the pattern, right, when the STI go up, you see this one also start to go up. The blue color line, which is the new properties. Yeah. Then when the STI drop, you see the property will drop. So actually, if you look at this graph, we know that actually the property prices tend to move in tandem with the STI.
Yeah.
Yeah. So this is one thing that we might want to look at when
Yeah.
we look at the prices.
Then from there, right, if today you add in the interest rate, then you can see how does interest rate actually follow the market.
Yeah,
For
correct.
example, you see during the financial crisis, right, the interest rate is falling, STI also falling, property price also falling. But because they need to spur the economy, because I think not so good,
Yeah.
Right. Then until the flat time, you see everything start to rebound, right? When the interest rate, this purple line is interest rate,
Yeah.
is stable.
Yeah.
See, everything go up, even STI go up. Same thing during COVID, they need to spur the economy.
Yeah.
Because, what everyone don't want is recession. Because recession means unemployment, right?
Yeah.
Then it's so they have to always balance this and go up interest rate high. At this right time, they start to reduce interest rates so that people will
Yes.
spend. So this is actually we call of how money flow.
Yes, correct.
So if you start to understand the mindset, how it works, right, it actually help you make smarter decisions. Like when to buy things, when to buy stock. But is it easy to do that?
Yeah.
Not easy. Because during the low interest rate, then you dare to buy. When high interest rate, right, you also want to cut your own spending, right?
Correct, correct. You can hold back.
So it's the emotion, because that's why all the quotes, right, like for example Warren Buffett, everyone use this thing, like be fearful when everyone is greedy,
Greedy, yeah.
but buy when people are fearful,
Yeah.
But is it easy to do it? It's not easy.
Yeah.
That's why you have to really have this fundamental, also have your own discipline, like what to follow through. Then you can work this way, in a way.
Yeah, correct.
So you can see when COVID, right, stable, right, the price start to drop. So right now, where are we? Today, in terms of property market, right, today interest rate is about 1.55 lah. We are at the midpoint. But you can see, right, the price starts to go up already. STI also start to go up. So the question you have asked yourself already, if there is 2 more cut, what will happen to the property price and the stock market?
Yeah, I mean, there's 2 scenarios. I think some people might say, hey, let me wait for a further cut. Further cut, I save more money. But when further cut, what is going to happen to the STI and the property prices? This is something we need to also understand.
Yeah.
And based on history, of course, it goes up.
When the interest rate start to go down, right, people start to buy, start to spend money, then it will boost the economy.
Yeah.
So usually business will benefit from this, and their stock price also go up. Then
Yeah.
when people make money from the stock, right, sometimes some of the money, right,
Yes.
will also come into property,
Correct.
want to upgrade all these things.
Correct.
So all this demand actually push up the price also.
Yes.
So today, if you are in the market, then I think it's time to really sit down, to talk to someone, to really go through, should we take advantage of this,
Yeah.
or is there any opportunity
Correct.
in this environment? Because this environment is actually quite short one. Once the thing move, for example, you see the window of the COVID actually quite short. But global financial was quite long. But we don't know how short this window is.
Yeah, I mean, nobody can predict lah.
Because right now we can know that actually now the environment is a lot uncertainty.
Yeah.
Because we have tariff, we still haven't really feel the impact.
Yeah.
We just know that this thing is happening, right? But usually all these things is lagging.
Correct.
But once you feel the impact, it's too late.
Yeah, I mean, I recall back then when during they announced the tariff, right? I remember, for example, one Marina Gardens, a lot of people, buyers also start to hold back. Hey, got tariff and what's going to happen? So, did they actually move forward? But now today, example, now interest rate has dropped quite significantly. I think, the recent news, Sky and Holland actually did very, very well on launch day.
Already.
Yeah, 98% on launch day. This is really...
So that means there's always this irony.
Yeah.
When you take a cheaper loan, right, lower interest rate, right, sometimes you pay for more expensive home.
It's an irony lah. Of course, everyone wants cheaper loan and then pay for a cheaper house, everything. But the thing is, when interest rate is low, people take action. What happens to the price?
It will go up. This is something that you have to ask yourself. Like, you want a low rate but pay a higher in terms of property price, or you want to find the balance? I think our job is always to find the balance for our clients. Right. Because in low interest rate, right, sometimes the price goes so up, right? But from there, right, is there something that we can look into?
Because I think a lot of us, we tend to want to wait for things to bottom up.
Yes.
Interest rate to be at the lowest, then we come in.
Yeah.
But sometimes when we hit the lowest already, the price high.
The price high, but we have no choice. We have to buy.
I always have to buy.
Because everyone is rushing in.
Yeah.
So when everyone rushing in, is this the right time to buy?
Yes, correct.
That's the thing. But in the end, you still must buy one, because if you don't buy, right, it will go through the next cycle again.
Yeah. There's no 100% solution.
And you see, like, for example, let's just say today everyone bottom out, then you see the queue in the Sky, I mean in all the new launch like that, the environment of Sky, you see, everyone is buying.
Yeah.
You will also become a bit, if I don't buy,
the FOMO.
the FOMO, right? If I don't buy, I think
later I miss.
I miss it.
Yeah.
But will we get the right price? I also don't know. I think this is something that you have to shift your mindset today. Try to explore the market. Keep exploring. Don't wait until everyone's buying, then you come to jump into a bandwagon. I think that is the worst thing that you should do as a buyer.
Correct. I also believe as a buyer, right, we need to have a certain framework how we actually are able to spot units that have built-in protection. I would say this built-in protection is very important. Not just about making money, but is this unit they are going for, is it safe or not? Based on all the framework and strategy. Anyway, interest rate is actually just one of the strategies.
One of the indicators.
One of the indicators, to we look at.
Yeah, today if you want to learn more, like want to explore, like at this stage, right, should I do anything with my property, with my portfolio? Feel free to contact us. Once again, I'm Matthew.
I'm Dylan.
See you soon. Remember to subscribe.